This Swanson Reed presentation provides information regarding the upcoming requirements for the publication of R&D offsets and expenditure claim information. This presentation has been based on publications from the Australian Taxation Office released in 2023 and 2024, which can be found on the ATO's website. Also, Swanson Reed has various written recaps on the updates available on our website, the links of which can be found in the video description below. Today we will start off with some background information and the key origins of the changes. Following this, we will discuss the significance of this ruling and any key learnings from it. As part of the recent changes to the Research and Development Tax Incentive from the 1st of July 2021, which arose out of the previous government's major reforms to the R&D tax incentive, which passed with bipartisan support in October 2020, the ATO is now required to publish information each year regarding R&D entities and the R&D expenditure they've claimed. The first publication will take place in September 2024 and include publication of information for R&D entities that lodged a 2022 company tax return with an R&D offset and whose income year began on or after the 1st of July 2021. The rationale for this change was to provide transparency on the benefits derived by the company's R&D tax incentive. The ATO also noted in their publications that the measure will encourage voluntary compliance within the R&D program. The information to be made available to the public includes the entity name, being the name of the entity that has claimed the R&D tax incentive, the ABN or ACN, being the Australian business number or the Australian company number associated with the entity, and the total R&D expenditure. This is referred to as the total notional deductions claimed and can be found under Label Z in Part A of the R&D tax incentive schedule. It will be the total expenditure on R&D minus any feedstock adjustments under Label B in Part B of the R&D tax incentive schedule. Confidential project technical details will not be published. The figures published will be based on the information provided by an entity in their company tax return, and in the event that an amendment is made, the figures will be based on the amended return. If the ATO makes amendments to the labels, this information will reflect the company return prior to the Commissioner-initiated amendment. The ATO also noted in a recent update that the Commissioner-initiated amendments won't be published. If the Commissioner amends the labels, the ATO is required to publish the total expenditure on R&D based on the company return lodged before the amendment. Due to tax law confidentiality provisions in the Tax Administration Act 1953, the ATO can't give information beyond what will be published in the report of R&D expenditure information. In terms of timing of the publications, the ATO have noted in a recent update that they are required to publish the R&D information 2 years after the end of the financial year. The first publication will be as soon as practicable after the 1st of July 2024 for the income year ending 30 June 2022, with the ATO noting that they expect to first publish this information in September 2024 and then on an annual basis. The first report will apply to companies that lodged a company tax return with an R&D offset and their income year began on or after the 1st of July 2021. The transparency measures mark a very substantial shift in the R&D tax incentive program. Whilst it has been a commonplace for details of grant recipients of other industry assistance, such as companies receiving accelerating commercialization grants, to be published, there has never been a uniform publication of claimant details for the R&D tax incentive program. This could largely be attributed to the financial benefits of the program being administered under the tax system. Given the significant change, there are mixed reviews on the measure. Swanson Reed can see both benefits and concerns around the change. Some of the benefits for the transparency measure may include that the R&D publication of expenditure information may increase transparency in this sector. This can lead to a better understanding and trust in the system. The transparency measures may also improve accountability. By making the information public, companies are held accountable for the receipt of taxpayer-funded industry assistance. The measures may also encourage compliance. The publication of this information is intended to encourage voluntary compliance. Companies may be more likely to refrain from aggressive or fraudulent R&D claims, knowing that the information will be made public. And lastly, the change may allow companies who invest in R&D activities to be publicly recognised amongst their peers for their R&D investment. While some of our concerns from the transparency measures include privacy concerns, some companies may have concerns about the disclosure of their financial information and may view this as an invasion of privacy. There's also a risk of distorted information. Some companies that have large R&D expenditure investment may choose not to claim R&D expenditure under the program or not to register all expenditure due to various reasons, including resource constraints or commercial decisions such as accumulated tax losses. The inaccurate representation caused by the mandated disclosure could lead to a distorted picture of the company's actual R&D activity. The measures may also put companies at a competitive disadvantage. The publication of R&D expenditure could potentially give competitor insights into a company's R&D activities. This could lead to a competitive disadvantage and potential media scrutiny as companies and industries which receive significant industry assistance through the R&D tax incentive may become a target for scrutiny. And lastly, the new requirements may consume regulatory resources to administer. Regardless of anyone's thoughts on the disclosures changes, they are now the law and stakeholders should be aware of the requirements. The move towards greater transparency is noteworthy and consistent with larger global trends in tax reporting. Overall, it emphasizes how important it is to have precise and legal R&D tax incentive claim procedures. In order to be ready for this change, businesses and tax agents should thoroughly review their R&D tax incentive claims and make any required adjustments. That concludes this presentation on the recent changes to the R&D tax incentive program in relation to the publication of R&D offsets. Should you have any questions, feel free to get in touch with our office. Thank you.